Good evening, everyone, or good afternoon, good morning, wherever you are. My name is Joseph Elam. I'm the Deputy Country Manager for StashAway in MENA. And today we actually have a very interesting topic that we'd like to share with you. It's part of our Money Chat series, which we launched in, about 2 months ago, where we bring industry leaders to talk about industry-related topics. And today's topic is actually quite interesting and very dear close to our hearts here at StashAway, is how to manage your finance, how to keep track of your finance, of all the expenses that you're paying on a daily basis. How do you take control of these of your money so that it doesn't control you? So all these are all the type of questions that we would like to answer today. And we have two amazing speakers that are joining us tonight. I'll start with the co-founder and CEO of Wally, Saeid Hejazi. Hi, Saeid. How are you?
Thanks for having me. I'm good.
No worries. Would you mind introducing yourself
Yeah,
and just a bit of background about Wally?
for sure. So like you said, my name is Saeed. My brother and I are co-founders of Wally. We started the company a few years ago. At the time, there was no open banking. So Wally was a manual expense tracker. So like a calorie counter, every time you spend money, you open up the app, you put in the amount. And then over time, you got to learn about your spending patterns. And you could use that information to get out of debt, increase your savings, or whatever life goals you had. Things started to change as open banking became more prevalent. And starting earlier last year, we started to automate the experience, giving people in 70 countries the ability to connect from 15,000 financial institutions. And what that does is gives you the instant ability to learn about your finances. So as soon as you connect all your banks, you can see up to 2 years of your spending patterns, which categories you spend the most in, which ones you wanted to pay attention to. And we are, that's what we do. That's where we are today, I guess you could say. Our focus now is on helping more and more people increase their savings. And I'm really grateful to be here. Thank you for having me.
Thanks, Said. And we'll dig in deeper about Wally in just a sec, but would like to also introduce Nandini, our CEO, our very own CEO of StashAway. This is obviously not Ramsey. We had a small change in lineup just before the call. But thanks a lot, Nandini, for joining us today and stepping in.
Thanks very much, and really happy to be on the call with Said. Thank you.
Thanks. Would you also mind introducing yourself and a bit about StashAway?
Sure. As Joseph said, I'm the COO at StashAway. So we are today present in 5 countries, actually Thailand launching in just a matter of a few weeks. So StashAway is a digital wealth manager. And, the mission of the company is to help people build wealth in the long term. And the way we do this is by bringing a world-class investment strategy to people in a very simple and cost-efficient manner. So things that, in the past, through traditional wealth management routes, you have had to go to private banks where, obviously, not just the high fees, but also the high assets that you have to commit to it. Usually this type of strategy would be available north of 10 million US dollars. So, we really believe in democratizing that access. Through both the investment strategy as well as technology. So I think we really sit at the intersection of the two. And in the DIFC and MENA, regulated by the DFSA, which we opened last year, which was a great flag. But again, across the world, we are regulated today by 5 different regulators. Yeah. So that's a bit of quick on StashAway.
Thanks a lot for the input, Nandini. And just before getting right into the subject, if anybody has any kind of questions, please feel free to drop them into the Q&A chat box on Zoom. We're also live on Facebook. So all the viewers on Facebook, if you have any questions, please feel free to drop them in the comment section. We can also grab your questions from there. And also we have a poll that will be out in just about a minute. So please feel free also to answer the questions in that poll. All right, Saeed, first question goes to you. So, and it's actually the question that we ask all of our guests on the show. I like to call this a show more than a webinar. That's
my account balance.
Sorry.
Is it my account balance?
No. Maybe that would be the last question. But but the first question.
It'll be a very sad conversation.
But the first question is: so, what is the gap that you saw in the market that triggered you to launch Wally?
It's more of a personal issue or personal matter for me. Wally is my second startup. When I was working on my first one, as I'm sure a lot of startup founders would also feel the same way. Your income, sometimes it fluctuates, sometimes it doesn't come. So you tend to be a little bit more conscious of your spending, especially when you think of your goals in mind. Making it paycheck to paycheck is a huge triumph, just to say the least. But this was many years ago, and I had to export my spending from my bank. I had to sit down on Excel and try to do it, and then I'd try to keep all this information in my head, over the weekend on what my budgets were, what was okay, what wasn't okay. So after that company got acquired, I started thinking about that. And because I went from like no money to a little bit of money, and I didn't want to go back to no money. And that's where me and my brother started to talk about, because he comes from a finance background. So if you think of Wally as fintech, he's the fin to the tech. So that's where we started to come up with the concept of basically having like a companion, so to speak, like something, not someone in your pocket, but something in your pocket that would kind of give you the right amount of information at the right time, at any time. But like I mentioned earlier, this was still before open banking. So the best way to do that was giving people an app where they can track all their spending on a day-to-day basis. And that slowly evolved as we grew almost to 2.7 million users. The technology started to change. We knew it would change. I mean, you could look at the US, where they have mint.com that gave people the ability to connect their bank accounts. But for everybody else outside of the US, manually having to do it was the best and only way. We innovated around technology. We used location services to identify what business you were in and try to auto-categorize it. But it was really after you were able to connect your bank accounts that we were able to give people a more holistic view. So understanding your debt, your assets, understanding the patterns. And now you get that information instantly. Like we tell people, like within 5 minutes, you can connect your bank account. You can and start to discover things about yourself.
Absolutely, and we will actually go into that topic of open banking and API in just a second. But Nandini, here at StashAway, we do pay a lot of attention on education and giving the people the proper tools to make their own financial making decision through the StashAway Academy. And one of the StashAway Academy topic is financial planning, where we explain about the importance of tracking your expenses, saving, and what are the other steps in order for you to grow your long-term wealth. So, but in your eyes, and according to you, why is it that important to track all these expenses, even the little ones, like that Starbucks coffee that you buy on a daily basis, or that taxi ride? Why is it so important to make sure that it's right there in my ledger, to see it in front of me?
I think a very, very fundamental point is what you don't measure, you cannot improve. So I think awareness of that last bit, because the $5 coffee that you spend on every day, or the parking that you spend on every day, or anything, compounding in finance is just such an important topic. And compounding doesn't just happen bigger balances that you put in a fixed deposit or anything like that. Compounding really happens for everything in your life, right? And that $1 every day or $4 every day, they do compound over life to really significant sums. So obviously, it's not to tell people stop having the coffee, but I think it's about, again, a level of self-awareness. And again, having that mentality of you cannot improve what you cannot measure, what you are not aware of. So I think for us, the basis of tracking is largely that. Yeah.
To build on that coffee. So I love and hate this example I'm about to give, because it sounds like a first world problem. But if you're someone that works for example, in DIFC, a price of coffee can vary from 5 dirhams, which is about $1.50, to about 7 dirhams, which is about $6. Pardon my math or conversions. But they probably mostly taste the same. And if you're someone who drinks 4 or 5 coffees a day, that really adds up quickly.
Yeah.
So it's about staying conscious about where, whether, do you want to park right in front of the entrance and pay $10 an hour? Or, are you going to drive down or walk a couple more minutes for, $20 full day parking? These things are, like you alluded to, they do compound, and that's what takes away from your savings budgets. That's what takes, that's what makes the 27th of the month so stressful. It's these little things that you don't keep track of.
Absolutely. And, again, the point is not to say don't have that coffee or anything, but just make sure, because whatever you're spending on things, it's your hard-earned money, the entire time you're working for it. And therefore, to think whether the value that you get out of it is really worth it, or, the long-term value of putting it away and investing it for your future maybe has a better return for you. So I think it's again about that awareness, which, just a lot of people unfortunately do not have, and that's where the problem actually starts.
Absolutely, and at least for me, on a personal level, this came and hit me just during the COVID crisis. Right, we were all in lockdown. We were all in our homes. Obviously, we were not spending on the categorise or anything like that, or any kind of vacation, but the impulsive buying did increase significantly while going to Amazon or Noon and buying just random stuff. If you look at my kitchen right now, you will see some stuff that I've never used before in my life, and I will probably never use. So at that point, I started, this is where I downloaded your application, and I started categorizing my spending and my expenses to see exactly where is it going. And for me, that's why it's important to know where and what are you spending on, and categorize exactly that kind of spend. So for example, if this month I spend like around 500 dirhams on taxi, next month, okay, I can see, okay, wait, how can I adjust that? How can I make sure to improve it, as you mentioned, Manzini? So thanks a lot for both your input on that. And I want to retouch on your point of open banking and API here, Saeed, and the importance of automating all kind of transactions, right? So Wally started as a manual entry kind of application where you just put your daily expenses there, and then you moved into integrating your app with a bank or all kind of banks basically to track that expenses. So according to you, that kind of automation, did it increase the savings in your customers' profiles or portfolios, or how did you see the shift between manual entry kind of approach to automated approach?
It's more, for us, it was more about more people being able to save rather than the people that we're saving are saving more.
Okay.
The reason is as you can imagine, adding every expense 2, 3, 4 times a day, every single day, you are essentially a hardcore budgeter to be able to do that. Like, it's really hard to create that kind of habit and stick to it for the long term. So the people that were able to do that, their savings consistently went up, or they got out of debt easily. I mean, we hear stories every day from people that either paid their first mortgage, the down payment for their first home, They plan their weddings, a whole bunch of stories. The difference with open banking is it allowed people that were, I don't know, I guess you could say busier maybe, or just didn't build that habit of manually adding it. It gave them the seamlessness or the instantaneous ability to right away, you download the app, you connect your bank, right away you learn. You don't have to slowly build up those patterns to retroactively understand how your patterns were. So it's just that now we're able to help more people increase their savings rather than the particular person, expanding on that.
Fair enough. And I guess it's very much the same here at StashAway. And Nadine, your input is much appreciated in terms of automating your savings and transferring from that bank account directly to the StashAway through standing instructions or even direct debit. How important is this actually for a customer to have this?
Yeah, I mean, for us, the systematic focus on hitting that goal of investing actually helps you in multiple ways. Dollar cost averaging into the market, you are better equipped to manage the ups and downs of the market, because markets are going to have ups and downs, right? And having a systematic approach just keeps you very much on track for your financial plan. And it helps you think through, okay, what can I afford? What do I want to afford? And then how is my long-term goal being managed through it? Again, I think to Said's point, the automation takes another hurdle away and another time where it's a burden on you. But rather saying, okay, this is a tool that helps me just execute that habit in a far more efficient manner, like 95% of the time, as opposed to 50% of the time. And for us, people who dollar cost average into the market, thanks to the habit of monthly putting in, they just manage the ups and downs of the market way better. Which basically means they stay invested. And staying invested means in the long term, you are going to come out a winner.
Exactly. And back to a point that you mentioned, Saeed, that the reason why you launched Wally is because some of the applications out there, even the bank, the financial institution, were not at a standard to provide this to their customers. And actually, that's the story of StashAway. That's one of the reasons why the co-founders founded the company, because there was not enough or the proper kind of service out there provided by the bank. So according to both of you, what holds the future to, first I'm going to start with you, Saeed, what's hold the future for PFM, so personal finance management applications, and Mandini for you for wealth management. So what's the future?
So I think there's a difference between us and you guys in terms of what we expect the banks to do. I fully agree that companies like StashAway are serving people because the banks didn't serve them. Whether the cost structure was too high or the capital requirements were too high, whatever it is. But for us, I don't know if, I wouldn't necessarily say our existence is because the bank didn't do their job.
Yeah.
Like for me, I see that as, I go to Carrefour and then them taking Coke out of my cart and putting milk in it instead because they think that's what's better for me. The bank, I want financial services from the bank. I want somewhere to store my money. I want the ability to pay. I want a loan when I need a loan, but I don't need your opinion. I don't need you to tell me what my life goals should be or how to get there or whether or not I should. Can you imagine if your bank blocked your card on Friday night? Like, you don't want that kind of responsibility.
You have spent too much money. You are not.
So it's just, for us, we see it as like, look, you need something third party. You need something that will connect to other banks to give you an objective opinion, which again is very different than you guys. You guys, it's really, I could not have been able to save my money if it wasn't for StashAway. But what does that enable for us? I think over time, the ability to find, like, remember how we were talking about that coffee example, helping people figure out, like, just on a day-to-day basis, this coffee is cheaper than that coffee, this parking is cheaper than that one, this insurance policy is better than that one. Or even to find more services, like, your bank savings account is not paying you interest as high as StashAway is. Why don't you try StashAway? So we think that, like, our first goal is to give people clarity, and then show them options, show them how they can really save on a day-to-day basis, how they can increase their savings and still live a good lifestyle.
I agree. And I think the commonality of it for the future is really about the customer centricity. I think it's about, empowering people, because at the end, it's their money, and it should enable them to have whatever life goals they want to have. Starting obviously, in any part of the financial sector, I think the future is customer centricity. For us, from a different angle, because I think a big part of StashAway was that when you talk to somebody for advice at StashAway, or you go through the material, any part of the education or the app, it's not about, oh, we have now this product and therefore invest in this product. It's very much about, your risk tolerance is this, what you have told us, and therefore here is the best portfolio. And that doesn't change unless your risk tolerance changes, right, through your life cycle. But I think the overall, for me, the future for not just fintech, but anybody, is customer centricity. I would be amazed if anybody thinks they have a future beyond, beside that.
Yeah, absolutely. So now that we've learned how to manage our expenses, you're using Wally to track all this kind of spending that you're doing, and I've raised a bit of money. So that kind of money that's sitting in my bank account, what should I do with it, right? So the saving that I'm doing right now, where should it go? So what are the steps in order for you to grow that money? And question for you, Nandini. So in your opinion, now that you've started saving enough, what should you do with that saving?
Yeah, I think, look, obviously, again, it depends. It starts off with where you are in your life cycle. Do you have dependents? Do you not have dependents? If you have dependents, have you taken care of your emergency fund first? If you're in your 20s and you're looking to put money away for retirement, your retirement is 30 years away, right? Determine your risk profile. But I think a few things about it is, money in the bank is eroding itself day on day. So I think what you have to think about really is, what is happening with my money on a daily basis, and how are my needs being met? So moving from saving to investing the soonest possible, basically means you kick off sooner. You're going to make it easier for yourself over time. You don't have to, think about your retirement much later in your life with much larger burdens. But, before you start to think about where to invest, I think knowing what your options are, understanding the instruments well, is really important. The investment part and building towards your long-term goal is meant to give you a level of peace of mind. You will have peace of mind when you understand where your money is and how it is being managed. So I think if you're really starting off along with your saving, work on your education. There is no better financial advisor in the world than you yourself having a level of knowledge. So I highly, highly recommend people that now, you have so many bloggers, financial advisors, like on the internet, you can find some really good material. You have Academy at StashAway. We have an Academy. You don't have to be an investor for it. Apps like Wally, they share so much content. I mean, pick the one where you feel comfortable, you feel, a tone of voice that matches for you, and stick with the education.
Absolutely. And for you, Saeed, what can Wally provide to customers, in order for them to, do better or do more with their savings?
Um, I think the problem that we try to solve for is a little bit earlier than that.
Okay.
Is how much to save, how much, like really, like just a very basic, where am I and where do I need to go? So one of the budgeting principles that we like or we believe in a lot is called proportional budgeting, or commonly known as the 50-30-20 rule. So 50% of your income is for essentials. That can include rent and groceries and things like that. 20% is for non-essentials. And then the remaining 20% goes into your savings. And all this is based on your income. Now, where does your 20% savings go? That becomes a very personal question. Like Nandini was saying, do you have dependents? Are you graduating from university with debt? Or are you starting to realize this already with debt? And I think that 20%, you have to have an emergency fund. I think if anyone learned anything, is that shit can happen to anyone at any time, and there's nothing you can do. I mean, like, I remember the Great Recession. I think the 2008. Like, there was some people that got really shaken, because of the collapse of the financial system. But last year, everybody got shaken at the same time. And I think that's what made a lot of people realize that first and foremost, you need to have an emergency fund. You could be climbing up the corporate ladder, but if everyone is sitting at home, I mean, it might not be another pandemic. It could be something else. But the point is you don't know.
Yeah.
So I think first and foremost, the emergency savings need to be there. Deal with your debt, and then increase your wealth.
100%.
And that 20% gives you a lot of wiggle room if you put like a 6-month, 12-month plan, even longer if you have tools like StashAway, where you allocate, that 20%, 20 of that goes into investing or savings or whatever it is. But it really does go back on a personal level. The person needs to understand, really what are essentials, non-essentials, and then that 20%, how do I diversify that?
Yeah, and I think in that, sir, the part of making sure that your saving is just as much an equal goal is so important, because a lot of people think about like, okay, I'm going to first think of all of my expenses and then I will see what is left. And I think you have to kind of bring parity for that
That's
saving goal.
Yeah.
And I mean, I don't know. I was literally taught that first you put 10% away, you should be able to always live in 90% of what you earn. And then, find another 10% to save to get to that 20% goal. But what you can afford should not come in more than 90% of what you earn.
And it's funny because culturally, that number fluctuates or changes. Yeah. So I lived in India for a few years, and all my colleagues, it was income received, income saved.
Yes.
And like 25% went into savings. Like really what was spent was the minimum, because culturally you had to plan, you had to get married soon, you had to have kids, you had to bring family security. And you see that across Asia. Like, I saw it firsthand living in India, but you see that. In the US or in the West, Europe and North America, it's more of an educational thing. People had to learn themselves on an individual basis that I want to be financially free. I want to have, $1 million by the time I'm 40. You know what I mean? Like, it's more of an individual picking his path. In the Middle East, forget about it. No savings, credit cards. Let me see what better car I can get. So it's really a cultural difference, but things are changing now, especially with millennials from the Middle East, where we are starting to take more control over our future, rather than, khali wali, it's okay and I'll make it.
No, absolutely.
Yeah.
You're right. And you said it, that the COVID crisis did teach us a lot. And one of the most important things is, as you mentioned, clear your high interest debt. form or like create an emergency fund, and then prioritize your life saving or your life goals. If you want to get married, if you want to plan for retirement or buy a car or whatever. So these are very important steps to take before thinking of anything else. All right. So I want to take a bit of a step back and just change our attention or divert our attention to data protection, and especially linking your bank account to applications like Wally. Obviously, there's a lot of data transfer in between that. So how do we make sure that how does the application like yours make sure that all the data is secure? Because obviously there are information in the between the APIs between the bank and Wally, very personal information also, like bank account details and loans and credit cards. So how do you make sure that everything is secure?
Yeah. So these kinds of topics, like for us, privacy and security are tightly coupled. And we have certain frameworks and policies that we follow. The most basic thing that we have as a policy is don't store anything of value. What I mean by of value is payment information, so your credit card numbers. We never store, we don't receive any of that stuff. The second thing is your username and passwords. These things never touch our servers. So when you connect with Wally, we have partners, open banking aggregators that connect to the bank. And we have different aggregators for different markets, but when we pick them, we always make sure that they're either PCI compliant, they're ISO certified 27001, they have third-party audits. So that's the bank connection. Now, what comes next is the data. That's where we start to handle. We encrypt data on your device. I don't know anybody else, definitely not in the PFM space, that has dedicated encryption on a device level. Everything in communication is encrypted, as well as anything that's stored on our servers. We follow requirements by even now with Saudi and their regulatory requirements. So the security part is even from an access of information at a company level, no one really has a singular view, like except for like a system administrator. On a privacy perspective, it's the only thing I can really say is your data belongs to you. You are the customer. We sell to you the premium version of the app, and no one outside the company has access to your private information, unless you want to give it to someone. That's up to you. But the point is, it's your information, and this has been part of our culture since we launched years ago. Before it was cool to be privacy centric, like it was never a topic for us. If we were always privacy first from the get-go.
Interesting. And I guess it's pretty much the same thing here as StashAway, but not maybe on the question for you, Nadine, not maybe on the data protection side, but maybe on the investment side. I do get asked that question a lot when I'm contacting clients. How do you make sure that my money is secure? Where does it go? Why does StashAway have access to it? So how can we answer this kind of question, Nadine?
Yeah, so again, obviously the first part of it is to know, the regulatory authorities, they have set, very clear mandates of how client money and company monies have to be segregated. So, obviously we follow very strictly that segregation, which basically means that actually StashAway's own balance sheet is never commingled with any of the client money, and the client money always actually at StashAway is managed under a trust account and under a custodian. And we work with world-class custodians as Citibank and Saxo, whose custodian are also Citibank and HSBC. So, the most important thing to know is the moment the money is transferred from a customer's account to a StashAway account that will be managing your money, start away from that moment, it is a trust account. It is not a StashAway company balance sheet account, which means that we can never touch that money, or the banks actually provide the custodial services. so that it's always segregated and there is a very detailed ledger that is maintained to ensure that the ownership of the money is continuously tracked to the client, as well as, as we obviously with Saxo after trading, it's held as securities. And those securities, again, are held in custodial accounts. So, for us, across 5 jurisdictions where we are regulated today, including the DFSA, has very, very clear guidelines and mandates around this. And, StashAway follows them to the letter. But it's also information that can be found on our website on exactly the custodial partners that we use, which are Citi and HSBC, actually, in all of our 5 countries.
Saeid, I have a proposition for you and a new maybe business idea. So what do you think of AI? Do you think it could be artificial intelligence? Do you think it could be the future for PFM? I'll give you an example. So if I spent during a month X amount of dirhams, and then by the end of the month I have a tool that can tell me, listen, that transaction that you've done on X day wasn't useful, and obviously it tracks my previous expenses. What do you think about that? Do you think that could help a customer to know a bit more how to manage the savings?
I mean, I think if AI, so a lot of AI is theory, right? I mean, it's me and your imaginations, we can sit down.
I'm very futuristic
and see what happens. Yeah. In theory, yes, it can happen. There could be an AI that looks at your spending patterns, but for AI to really do that, it has to look further than your spending. It has to understand who you are, what your goals are. Otherwise, the AI won't know, was the bottle of wine an essential or non-essential? It could have been you had a shitty day, you need to drink. It's essential, it's important. But other than that, if AI really had the ability to make decisions, then it could, purchase things in advance. It could purchase things for a group of people in advance. It could do better forecast demand. Or it could move my money across different accounts while I'm sleeping, because this one offers a higher interest rate now, or that one, is whatever. But so having a computer
here. That's really scary. That's really
it is. But I mean, eventually, at scale, you have the perfect economy. The AI will know what tickers, which public markets, which public companies are going to grow. You'll have meme stocks that are driven purely by an AI algorithm.
Yeah.
But I don't, to be honest with you, I don't even know if we need that. It's what people really need is just a little bit of clarity, a little bit of control, and some options. And that's it. I don't know if I need a computer to make decisions for me. Like I said earlier, I don't want my bank making decisions for me.
Yeah.
But yeah, it's possible. I mean, who knows what can happen between now and then. I don't even think we'll have to work by then.
No, but I think that's a really important point that you make, in that, you wouldn't probably want somebody else doing that for you, because money as a whole is such an important tool to enable so many things to happen in your life that, for me, understanding how to manage your money better should literally be taught at school. And it's really a pity that personal finance is not taught at school. I mean, I have a 12-year-old and a 10-year-old, and, we have a sheet of paper which has needs on one side and wants on the other side. And we started with the lesson of literally, is it a need and is it a want? It's a vocabulary lesson first. But, it's really a pity that it's not taught. I mean, university graduates do not know what credit card, interest rates are and how does it work, which is really a shame.
I can't, what you're saying resonates so much. It's so in the fintech world, we're by far the unsexiest one. No one thinks personal finance is exciting, budgeting is exciting. But at the end of the day, you track your steps, if you wear a heart, and you track your heart rate, you track your sleep. Like, how do you not track your spending?
Yeah,
like
absolutely.
It's the lifeblood of your real world. And how do you not know where are your weaknesses, or where are the opportunities? Or because we go to school to go to the best university, to get the best jobs, to have security, but you don't have a way to track and make sure you're getting there. It's like what you were saying earlier. If you can't track it, you can't improve it.
Yeah.
So there's this, how as a company, you design your target audience. So one target audience, one of the big markets, or the type of users that we are called hipsters, high income, paycheck to paycheck. It's just like, as your salary increases, so will your spending, and you will never get out of this rat race. And it was like you were saying before, like the beginning 10% should go into your savings. But if you don't know where the rest of your money is going, how are you going to get out of that loop?
Yeah, absolutely. No, I think personal finance really, already at secondary school, it should be a key point. Kids get pocket money. And, the first lesson is about, I get money to spend, and I think that's a very convoluted lesson that we start children on. And obviously I'm learning all of this in the last couple of years since my kids started to get into that age group. So it makes for very interesting conversations when you tell them, no, that's not.
It's about knowing how to treat those situations. Like everybody, I wish I could eat pizza and McDonald's all day long. I really, these are my top 2 favorite, but it doesn't mean I'm going to do that. I get my paycheck. I wish I could, buy the latest gizmos and stuff, but I know the 26th, 27th of the month, I'm going to start getting stressed out. So it's like, and it's so easy to give yourself that peace of mind and that clarity that, like, you know what, I'm not going to splurge the first weekend. I'll splurge the last one. Let me see how I do between now and the next 3 weekends.
Yeah.
And then see what happens. Just put your savings, what you would have spent this weekend at the club, or when the club's open, whatever, non-essential spending, put that one in the savings. And then one thing that I find, like, when you start to save, it becomes exciting. When you see a number that continuously grows slowly and slowly, but continuously, and it's compounding, that's cool. Yeah. That's sexy. I can get behind that. But when you're always burning and then stressed at the end of the month, like, how many months are you going to go through this before you realize, like,
yeah, it's self-satisfaction as well. Like you're rewarding yourself at the same time for all the hard work that you've been doing.
And it's the best reward.
Exactly. Exactly. So in conclusion, I understand that my business idea would not pass the Shark Tank evaluation. So that's what
Joseph, stay in your current job.
or come try to build something like that at Wally. We'll see if people don't uninstall the app because you told them stay home too many weekends in a row.
All right, just to end things off, from both of you, what are your top 3 tips for someone that's really struggling to save? I'll start with you, Saied.
Download
Wally. That's one.
Yeah. No, I mean, yeah, sure. Download Wally. Please do. No, but I think there's this negative mental connotation that people have that tracking their spending means tracking their losses. And people try to avoid it because they think, if I don't think about it, then it never happened. But it happened. And you're going to find out within a couple of weeks, until your salary comes in and it's just like serotonin levels start to hit, and then you think you're great again. But it's just so much easier to give yourself that kind of clarity. Once you do that, you'll realize you have options. You'll realize really how to pay off debt, or really how to increase your savings, how much money to put aside. And no one is saying stay home. No one's saying stop drinking coffee. But it's just about making smarter decisions on a day-to-day basis. I think that's, just give yourself clarity. You'll give yourself peace of mind. You'll be able to make the right decisions. I think that's the only tip really from our perspective.
Interesting. And from StashAway's perspective, what would be your
download Wally? No.
Download StashAway.
No, look, I think again, it's about, for me, the biggest part is money is not the end game. It is a very, very important tool to help you reach your life goals. So start off by, defining your life goals, and then see your personal finance as really a way to get to those. And I think that's what will make it more exciting for you, or take away, as Saeid, you said about that whole losses part, because you are actually now thinking about using that tool to build towards something, rather than beat you down towards something. And, whether that goal is short term about, improving something for yourself, wanting to invest in yourself, in your education, in your travel, or, a long term goal of retirement. But, at the end, money is a tool. It's a tool to help you build. It's equally a tool to help you destruct. So I think mindset is really important. And then the second part is, I also see one of the questions that came in is that a lot of information is a problem. I agree there is a lot of information out there, but look for the one which has the right tone of voice for you. We have, free webinars on financial planning basics, investing basics, download the Wally app. Just, using it every day will teach you something about yourself. So you don't have to read for 25 hours or anything like that, but, pick a couple of things to just follow through and then practice. Just keeping that in mind and practicing it is just gonna make it so much real for you that you'll be able to really, see what it is helping you achieve. Just helping, just saving is still a goal for something else that is more aspirational for you. So, lead with that.
Thanks, Nandini, and thanks both for your inputs for today's session. And I really hope that everybody, did take some takeaways out of today's chat, and empower themselves to start saving a bit more. Download Wally and StashAway, and enable your investing journey and your saving journey from here. So again, thanks for both of you. We'll just take a few questions. I know there's 10 minutes left until the end of the webinar, so we'll take the questions that are here. A bit of a shy audience today, but please, if you have any questions, please don't hesitate to drop them into the Q&A section. So first question is, why don't you have a universal automated compounding for everyone? It seems time to lift the bottom up a bit. Saied, you were talking about compounding in the beginning, so why don't we have a universal automated compounding for everyone?
Universal automated compounding?
It's a bit of a, I personally also have a difficulty understanding the question.
Yeah, I'm not sure if it's about like money in your bank account. But look, compounding really comes when you invest your money into something, and you invest it systematically over the long term. That's where compounding really comes. So obviously there are different products out in the world, but one of the things to pay attention to when you invest is whether it's adding simple interest or it is adding a compound interest to you. So I would probably want to suggest to pay attention to that.
I think everyone knows this adage now, the rich get richer and the poor get poorer. The difference is that rich people are investing. They're not smarter. I mean, maybe some of them are smarter than us, but generally speaking, when you treat money as a tool, and what you were saying earlier, money is a means. When you change your psychology and start treating it as a means, it starts paying you. It starts to compound itself. And now that you don't need $10,000 or $500,000 or whatever it is to open a savings account or to open an investment account, that is what happens. So it's about people that are, starting, they're joining the professional world, first jobs, or you're growing in your company. You have access to these opportunities that weren't available 10 years ago. You put your money in there, put a small, start with whatever you can, 20% of your income if that's possible, and you will see it compound.
Yeah,
Absolutely.
I want to add something on compounding. And for me, actually, according to Einstein, it's the eighth wonder of the world, right? Because if you know how to use it, it will reward you so much. But if you don't know how to use compounding, it can really come and bite you because it works both ways, right? So for your investment, if you keep on investing on a dollar cost averaging method, all your returns will be compounded. You make returns out of your own returns. However, it also works backwards. So if you have a credit card debt and you're not paying it off on a monthly basis, that will also be compounded and you'll be paying after probably a year double what you should be paying initially. So make sure to use that eighth wonder into your advantage. So, okay, question number 2 is how do you plan to make a profit and serve well your clients? I guess this would.
This one's easy. Can I answer this one?
Go ahead.
Gave you the hard one last time.
I guess both of you can answer this one.
It's very simple for us. The app is free to download, free to use. If you want advanced features, you upgrade to Wally Gold. You can pay on a monthly or annual basis. And if enough of you do that, we will become profitable. And that's pretty much it. It's pretty simple.
Yeah, look, for StashAway, we have a very simple fee structure on assets under management. It's a competitive fee structure compared to, what traditional financial institutions have been have had in the market for investing. And again, the way we are able to bring a competitive fee structure is because we leverage technology to bring things at scale. Technology has changed people's lives in every field, and fintech is really one of them.
Interesting. All right, we have a question from Marwan. Can open banking also be used to help us save automatically, such as that my spending habits are tracked and money moved into a savings account without me realizing? For example, if one day I buy the $1 coffee instead of the $4 coffee, $3 can be taken out and saved. I think Marwan shares.
So Joseph, you might have your first customer for your AI idea.
So Marwan, if you'd like to invest in my idea, please reach out separately. So I think we touched upon that point that it all depends from one person to the other what they like to do with their money. But would that be a good idea for someone to, instead of him paying $4, he paid $1, the $3 goes into back. Or even I'll give you another example. If you paid, for example, $29 for a taxi ride, can that extra dollar be going into a savings account? Round it up and just take it there.
Yeah, like the roundups and the passive saving type model. I think those are all. I like those ideas, especially for someone like I like things automated. Like the whole, I'm just. What we're really trying to do at Wally is just to simplify and automate things so that you have less, cognitive load or mental accounting or whatever you want to call it, or just call it stress, just so you have less on that. But yeah, like realizing how much you spend and then putting it in a savings account based on your own patterns once you start to see what they're like.
So we have another question. If I'm a client, can I know your tech stack? I don't like Google Ad Services. I think this is for you, Saeed.
Our tech stack. Someone's asking about it. Where are you reading these questions, by the way? Our tech stack is our hosting is AWS. Most of our backend is in Node. We have some sales. And then on the app side, we use Swift, but we're actually launching a new version that's going to be in React. I guess that's pretty much it. Our tech stack is not that complicated. We have some products or features on the back end that do some certain jobs like named entity recognition, all that stuff. But generally speaking, it's Node, AWS.
I think the viewer is asking more about if he can use your tech stack so that he doesn't receive Google ads on the app. It's quite an interesting question. That's what I understood from the question anyways. but it's okay. Thank you for sharing your. If you want to share also the code of of Wally, please feel free. And that's actually the right time to share your bank account details and account balance, if you would like.
There's one question in the chat.
That's in the chat. You have the Q&A as well.
Okay. Yeah, we have a question in the chat. It says, does Wally give you a statement trend graph to compare expenses for different months for valuation?
Yeah, that's the basic thing that we do. You connect your bank, we pull your transactions, we automatically categorize them, and we'll show you generally how your spending has changed month over month, or a particular category, or a business. If you want to know if you're spending more or less on Kareem or cabs or whatever it is, that's what Wally does. We simplify it and we give it to you in bite-sized information.
Right. Maybe there's also one more question in the Q&A from Fadi. I just downloaded Wally. There's no Lebanese banks in it to connect my account. What should you do in that case?
Oh man, there's a joke in there, but I'm going to leave that one. Unfortunately, no, we don't have Lebanese banks. We have Egypt, Saudi, UAE, Qatar, Bahrain, Kuwait, Lebanon, not yet. But if Fadi can drop his email somewhere, I will definitely let him know. If he can just even let us know what bank it is, I can follow up with him after.
So Fadi, in the chat, you can just send a direct message to Saied to share those details. All right, cool. I think this is. I don't see any more questions. And on Facebook in front of me, there's no more questions as well. So with that, I would like really to thank both of you for your time today. There is one more question. Okay, thank you.
And I want to thank you guys for having me. I had a lot of fun, and we'll speak soon. And thank you everyone for
being here. Very much.
So thanks again for joining, and have a lovely evening.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.